Hello, hello. Hi, good evening. And this is Meng Hon, your host for Traders Talk. And this is a show which we have been having for. Wait. There's let me just troubleshoot this sound. Let me just. Okay, all right. I think it's okay then. Okay. So as I said, this is a show where we have been having for quite a while right now, and of course, for those people who are following us, I really appreciate it, and I hope that you are getting great contents out of our traders show, which we have been having for I think almost coming to a year right now. Yeah. So today we are going to have another great learning session where we will actually talk about how to actually become a property tycoon. Okay, but of course, we are going to teach you how to actually become a property tycoon through the stock market. Yeah, through the stock market, and basically, how do we actually generate income as if we are property owners? Yeah, property owners. Okay, so for those people who are excited, give me a thumbs up, and then we can actually go through this learning session later part in the show. And of course, the earlier part we will actually cover the what is that? The markets, so just some updates about the markets, and also just share with you basically what is actually expected in the coming week. Just let me test check again to see that the sound is okay. Okay, yeah, I think it's okay. All right. So yeah, and market has been very volatile, and this I have actually said since I think early part of the year already. This year is going to be a volatile market, and I think every week we are actually getting something new, right? I mean, for the past 2 weeks, recall that the market was actually coming down, right? The market was actually coming down for the past 2 weeks, and of course, what happened yesterday? This was actually last Thursday and Friday, right? Last Thursday and Friday, the market actually dropped by I think almost about 200 points. Yeah, almost about 200 points, close to 4% in just 2 days. Okay, so for those people who are scared out of this and think that basically the whole market is actually going to collapse. Not to worry, of course, if you have been following us in the traders talk, right? I mean, we have actually somehow prepared you guys for this kind of thing, yeah. Because in the past, I think one or two shows, right? Even in the past two shows, basically, we have been really focusing on the price action of the market and basically what is actually possible and uh, and what can actually happen and when that happened, what can you do, or even before that happened, what can you anticipate and basically try to actually how to say benefit from the expected price movement. Yeah, because last week we actually said that the what is that, the market actually moves in repeating patterns. Yeah, we said the market will actually move in repeating patterns, and of course, what we are referring here is actually uh, a repeating retracement towards the expected announcement of the interest rate hike in the US. Yeah, and of course, this is actually expected to be announced on the 4th of May. 4th of May. And just to recap what we have said last week is that in the previous uh, rate hike, which actually happened on 16th of March, right? 2 weeks before that, basically the market has actually gone down. The market has actually came down 2 weeks before. And of course, once the rate hike was actually announced on the 16th of March, basically the market actually have rallied. Yeah, and you can actually see this the let me maybe I share with you the chart so that it is actually more interactive, right? Okay, let's move it to the chart. Oh no. Okay, Let's see here. Okay, let me put it up quickly. Okay, the chart is here. Okay, okay, this is the chart. Okay, if you guys see it, give me a thumbs up. Okay, all right. Okay, so as this is Nasdaq, let's put the SPX. Yeah, we use SPX as the benchmark for the market. How basically what has happened in the market because this is S&P 500, right? Okay, what has actually happened, like I said earlier, is that 16th of March is actually this date here. Yeah, 2 weeks before, market has actually came down pre interest rate hike because they were talking about whether to raise 25 basis point or 50 basis point. The market actually came down, and of course, till 4th of May is here. 4th of May is here. And of course, we are seeing similar patterns, which is actually, which we said last week that the market might potentially come down towards 4th of May. Okay, and of course, what we said was that potentially there would be potentially how to say to reach down the previous low, and of course if it bounces, then of course post that there is a high chance that it can also come up, just like what has actually happened in the earlier last month's rate hike. Yeah, and let's say here, okay. But of course, something contradicting actually happened yesterday. Is because if you look at what has actually happened yesterday is here. What has actually happened yesterday is here. Okay, what has actually happened yesterday is that suddenly the decline, right? Because if you look at the market yesterday, the market opened up and then it rallied up early part of the session. Yeah, once the market actually opened, it rallied up, and of course after that it went down all the way, and you can see that it hit here. It hit actually the bottom somewhere around. Let me see, somewhere around this undo button. Okay. Okay, it hit the bottom somewhere around here. This line here, right? Maybe about 4204, right? 4204, and then it rallied up very strongly. So from here up to here, it is almost about 100 points. Yeah, it rallied almost about 100 points up. Yeah, in just a short time span. If you actually want to see how how fast it actually rallied up, right? Let's put it in the, let's say 5 minutes. Yep, 5 minutes. Okay. So many lines here. Okay, this was 25th. Yesterday was 25th, right? Okay, somewhere here, right? Okay, so it was actually coming down, right? It was actually coming down. Let's put it bigger. Oops. Okay, it was actually coming down. If you look here, it was actually here, right? 25th is here. 25th. Okay, so you see here, initially when the market opened, it came down, right? Then after that, it went up, and after that, it all went all the way down here, right? And subsequent to that, it was just going all the way up. You see, so this is a strong rally up of about 100 points up. Yeah, from the lows. So of course, if you look at the price action, it seems that the market has actually turned back. Short, I mean, very short term, it has actually turned back bullish, right? But of course, don't be, how to say, don't be cheated by the market, right? That's what I say. Okay, don't be misled lah. Don't be misled that this can continue to actually go up because I'm not too sure, but of course, if it continue to go up, then of course that's something great. But again, like I said, there is still actually a bit more uncertainty way up to the 4th of May, right, where the rate hikes are going to be announced, and of course, the market makers, right, will actually take any opportunities during this period, right, to actually play the market or play you out. Okay, and of course, it can actually do a so-called fake reversal and a bullish, very bullish candle here, right? And of course, what next? It can continue to actually come down or turn red when they put out some very bad news. Of course, I think this week there is actually not much announcement or any data which is actually coming out this week, or any speech or text which is actually coming out from Federal Reserve. But of course, we do not know some bad things or some things which they might put in the market, and of course that will push the market down a lot. So in terms of positions, as I said earlier, be flexible in your positions. Basically, short-term positions, very short period. If you have actually made profit in your earlier trades, take the profit and then basically take other opportunities to actually enter again with when the price action is more intact, or you can also shorten your trades, right, instead of doing swing trades, probably shorter trades, day trade, or the next day. And of course, if you are doing day trading, please be mindful that your account is above $25,000, yeah, because, to avoid them flagging you out as a pattern day trader, and they block you from trading or opening new positions. Yeah, so watch out for that. Just if you are day trading, yeah. Yeah, so this is the current situation, and of course today the ES mini futures has actually opened up slightly red, but about an hour ago, I think it started about an hour, 2 hours ago, I think 2 or 3 hours ago, when I saw it, it has actually recovered up a bit, from down of 16 or 18 or 19 points, right, to down of 7 or 8 before the show. Let me just check here. Oh, now it's back to minus 17. So you see, it turns so fast because earlier the ES mini went back up to minus 7 or 8, and of course during that retracement up, I also took a position to ride it back up and exited before the fall, probably, yeah, before the fall, yeah, because when I exit, I think it was still at 4283 when I exited back the trade, and now it's actually at 4274, about 8 or 9 points lower, yeah. Okay, so rate Dow futures is down 152 points. Nasdaq is 63 points down. Nasdaq futures. So I think it looks okay. I mean, yesterday initially I think it was even down more, but I think at the end of the day it actually closed positive, if not mistaken. Yeah, you see, yesterday it actually closed positive 176 points, which is actually quite a lot. Yeah, so market did not bottom to the previous low, but of course keep an eye on the price action. If today basically it can actually go up again, then of course it is actually more possible that the reversal is actually happening much earlier. Probably midweek again, 2 days up, 3 days down. Yeah, remember last week was 2 days up, 3 days down. Yeah, 2 days up here. 2 days up here, and 3 days down. Yeah, so short-term trades, yeah, if you are riding it up, ride it up, and of course, if you make profit, just close the position and come back on Wednesday or Thursday, yeah, Wednesday or Thursday, to see if the price will actually come back. Okay, so this is actually the S&P and this Nasdaq, right? Sorry, S&P and Nasdaq. Nasdaq seems to be more stronger as compared to SPX yesterday. As compared to SPX yesterday, because it moved up faster than it did not move down so much lah. It did not move down so much. Yeah, and of course it moved up faster, if not mistaken. Yeah, so. These two, and of course earnings is also coming. Earnings is also not coming. I mean, earnings has actually started right about 2 or 3 weeks ago, and of course one of the earnings which was again very bad, right, was again very bad, was Netflix, which was Netflix. And this is the second time round. This was the second time round where Netflix has actually got a very negative earnings and also their forecast. Yeah, and of course, if you look here, the decline is actually about 38%. And yesterday was also going down, probably coming to about 40%. Okay, so continuing from the previous earnings cycles, right? What we actually see is that for stocks like this, Netflix, yeah, and for stocks, that means basically those stocks which were previously very high price and now, right, when they don't meet so-called forecast, or they don't meet expectation, right, the market will punish them very hard. Yeah, as I said, nothing less than 20% is their punishment. Nothing less than 20% is their punishment, and of course, Netflix is double the rate. The previous round was actually 30%. Now was actually 38.8%. Yeah, so even investors who actually came in here, right, fund manager Bill Ackman, right, if you guys know that he actually after the drop here, he actually invested in Netflix. And after the subsequent announcement here, right, he has actually cut loss and actually exited the position in Netflix for 400 million loss. 400 million. Oh, can you imagine 400 million? Yeah. And of course, as a trader or as an investor, of course, if the how to say, your thesis does not into the trade does not work anymore, then of course you would actually need to adjust your position or even cut loss, even though it is actually painful, because we would not know that, of course, after the second round and on the next what is that next cycle of earnings for Netflix, right, it might continue to actually drop again by 20 or 30%. Yeah, we would not know. Okay, so this week I think Facebook is also having earnings. Yeah, and of course for Facebook, I how to say, I mean, I am not really bullish about Facebook because again, when if they do not meet the so-called subscriber or the new members or new subscribers coming into their platform, right, then of course market will again punish them with a significant drop here. Yeah, you see, this was actually about 20% drop, right? Then now it is actually coming back to the previous low here. Yeah, that you can see that there's actually a small bounce here, but earnings is actually coming on 28, which is on Thursday. Yeah, which is on Thursday. So for this, I mean, although it looks like a very nice triple bottom, right? 1, 2, 3, right? And with a very nice candle here, right? I mean, I would tend to be careful for this, mainly because of the earnings. Yeah, mainly because of the earnings. Yeah. And it can actually go both ways. Of course, because the price is already very low, right? If the forecast or the expectation is very good, then of course it can actually bounce up very, very, very quick. But of course, if it is the other way, then it can also go down by another 20%. Yeah. So both ways, it can actually happen for Facebook. Then of course, Apple is also having earnings, right? Apple is also having earnings, and Apple earnings is on Thursday also. On Thursday also, I think is together with Facebook after market close, if not mistaken. Yeah. For those our newsletter subscribers, I've also put out this week's earnings to them, and also shared some ways to actually trade huge movements. Yeah. Like the Netflix earnings, basically, we had actually just put in a bear put spread to actually trade the earnings. Yeah, because to buy a put, to buy a put, basically it costs about $2,000, 2,000 over dollars to just buy a put. Yeah, just buy a put. It's too expensive, and to be safe, basically we just put in a very cheap entry of a bear put spread, and basically the risk reward is for short term bear put about one to slightly above one. Yeah, 1 to 1 plus. Yeah, and of course with a big swing in movement, right, of $100 post earnings, right, then of course the bear put spread, you will actually go all the way almost to the max profit immediately. Yeah, because it is very deep in the money. Yeah. And the other trades which we actually start to put on is a bit more on the medical and pharma, right? Uh, KMB. Yeah, we also put on a trade on KMB. This is actually Kimberly Clark. Consumer goods, I would say, is actually consumer goods, and also towards the pharmaceutical side, right? It would actually be quite positive during this round earnings from the past few earnings cycle. Yeah. So we have also put in a earnings trade on KMB, Kimberly Clark, and of course post earnings, the stock actually popped about 12 or $13. So similar. Of course, we also put in a bull call spread for this, and of course, because of the high movement, high pop, it also went almost to max profit post earnings. Yeah. Yeah. So the more bullish stocks coming to earnings, which we might see how to actually trade it, is Microsoft. Microsoft earnings is on 26, which is today, right? Today after market close, I think. Today after market close. So we'll see what to actually do on this. Also depending on the market today, whether it's actually bullish or bearish. Bullish or bearish. Of course, if the market is bearish, right? I mean, the how to say, the outcome of the earnings, right? Outcome of the earnings will of course be diluted, even if it is very good. Yeah, similar to what has happened to Tesla. Yeah, similar to what has happened to Tesla. And when Tesla actually announced earnings, right, on 20th of April, I mean, earnings was actually quite good, despite slowdown and in supply chain. China, the manufacturers do not want to produce their cars. Yeah. Yeah. Or I think it's the chips or something, right? Yeah. The Tesla actually popped about 100 or slightly above $100 post earnings. You can see this long candle here, right? It actually went up all the way $100 over dollars. Then of course, because that day was actually the market was actually very bad that day, it actually lost almost about 70% of the increment. I think it has actually only went up by about 30 over dollars at the end of the day, as compared to the initial 100 over dollars pop up here. Yeah. Then of course, the subsequent day it did not move much, and you can see also on yesterday itself. It hardly actually moved, yeah, -7 points. -7 points, yeah. It went down, but of course it recovered a bit, and it's actually -7 points, almost coming back to so-called pre-earnings. What is that? Pre-earnings price, right, of 977. Now it's now 998. Yeah. Google, it should also be announcing earnings this week. Google, yeah, Google should also be announcing earnings, and of course, this one, I would also be more on the bullish side based on the past earnings pop, right? As you can see that this is actually a past earnings. It actually rallied up, and because Google has actually come down so much, right, even below the previous lows, you see, and it's about coming to about $2,400. Yeah, $2,400. Where when it came down to $2,400, I mean, we could not resist but to put in more investment position in Google at 2004. Yeah, and now it has actually went up to 2461. No, 2461. Yeah, today is actually slightly down. Yeah, so I mean, many exciting things happening this week. So watch the market, and of course, if the market is bullish, then those potential stocks would actually benefit. I mean, those stocks like Microsoft, Google, Amazon would also benefit from a positive market. Yeah. Okay, so that's what I actually wanted to cover about the market. If you have any questions, do post on. Then I can actually answer any of those questions in the chat. Okay. Okay, so we will go on to some more trainings, and of course, if you're new to trading, if you're new to options, then of course this might be something interesting to you. And of course, if you are also, if you have been actually trading options, and if you are actually only doing plain vanilla options like buying call, buying puts, of course there are actually a lot of option structures where you can actually trade, where you can actually trade, and during different times, different structures, and also certain type of option structures where it can also mirror certain type of asset class, and of course, in today's training, we would actually want to show you how you can actually use options to actually mirror property investment, at a fraction of the cost, yeah. Let me put up the slide. Where did the slide go? Because I mean, one thing I love options so much is because it's so versatile, right? I mean, you can get free stocks. You can get free stocks with options. Free stocks, right? You can actually buy stocks at discounted prices. Yeah. You can actually how to say? You can actually generate so-called low risk, high return trades of one risk 1 to 10 reward, yeah. Various type of structures, yeah. It depends on what you want, and basically it is actually so versatile that you can even buy how to say, buy free stocks. That means you don't need to actually pay any money to actually buy stock by actually doing structures like synthetic stock, where basically you can have a zero. That means zero value, like that is actually a buying power block to it, but basically it will be zero value. That means they don't deduct any money from your account to actually do a synthetic stock through options. Yeah. Okay, so here, becoming a property tycoon through the stock market. Okay, what I actually wanted to cover is that a lot of people when when they start to work, and when they generate money and generate income, they have all this excess savings and all. They start to actually look to buy property, and of course, this property is the first one would be the property which they actually stay, and the subsequent ones are the property where they actually put it as a property investment. Okay, they actually want to invest, buy the property, and then rent it out to actually get cash flows from the rental income, and of course to also pay for the mortgage if they're actually borrowing to buy the property. Okay, but of course over the years, many people are actually starting to do this. And of course, when many people are starting to do this, that means basically the market demand and the market supply is growing, is very big, and to a certain extent, the supply of the market became bigger than the demand. Okay, and of course, when the supply of the market become bigger than the demand, the problem is that a lot of people actually get stuck. They actually get buy one property, two property, or three, or even four or five, and at the end of the day, they could not rent it out. And they actually stuck a lot of capital, or even indebted to the banks, that to the extent that they are having financial problems to actually pay for all these loans. Yeah, so this is one thing which is actually very pertinent nowadays, and of course is something which I think a lot of people how to say, they become a bit skeptical. To the extent that some of them say, okay, I better put my money in the bank than reinvest in property, because there is actually a property bubble and all these kind of risks where they cannot generate cash flows out of property investment. Yeah, so they actually don't do it. Okay, so for those who have actually done it, I mean, they are stuck lah. But of course, for those people who do not actually want to do it because of all these problems, there is another way, and of course, this way is actually through the stock market, and basically the structures of this investment, or this so-called asset class, is similar to you renting an asset, and then basically you owning an asset and then leasing it out to generate cash flow. Okay, and this we can actually do via stocks and also options. Okay, this is the yesterday's all green except energy. This is last week's position, which was all red. Okay, so again, I wanted to share this with you, and just to show you an example here. Okay, what a traditional lease where people actually do, I mean, basically they buy a property, right? In this example, they say a property is actually worth $600,000, right? So what they do is that they look at the property, they like it. Okay, they look at the location, nice, everything. Okay, so they actually buy this property. And most people, when they buy property, they don't buy by cash. They actually pay via borrow money from the bank, take a mortgage, and then basically they put 10% down payment. So for 600,000 house, you are required to pay 10% if it is your first house. And of course, you probably, if you're renting it out, going to buy and rent, it's probably not going to be your first house. Yeah, and of course, if it's not a first house, then depending on your second or third, if you have three already, then probably you need to actually pay 30%. Okay, but let's put a scenario here where you're just starting off with 10% down payment. You need 60,000 cash to actually put into a new property, and at the current interest rate at 3%, yeah, 3%, 3.5%. Here is 3.6%. 30-year loan, assuming you're still young, not like me. I cannot borrow any money with on a 30-year time frame anymore, because I'm not that young. Okay, so assuming a 30-year loan, then basically each month you're going to pay $2,455 for the loan installment plus interest. Yeah, for the next 30 years you're going to pay this cash flow. And say you're lucky, you actually get to rent this condominium out for the same amount as the loan, which is $2,455. And of course, if you're buying a condominium, then there are actually extra charges like like what maintenance fees and all these kind of things, right? Yeah, which can come up to also three to two to $300 also. But let's put it that net you get the rental after deducting all your expenses, you're getting $2,455. So again, when this happens, you collect the rental every month, and basically you also pay this to the bank, same money installments. So there's actually zero cash flows for you, and you have actually put in 60,000 capital into owning this house. And you are lucky it's rented out. Of course, if it is not rented out, then of course it's going to be a negative cash flow of $2,455 monthly for you. Yeah. So this is the example. And basically, how do we actually use similar kind of capital, right? Similar kind of capital to actually generate similar asset class, so-called type of cash flows, which is actually rental through the stock market. I will teach you a way here, which is actually called stock market lease. Yeah, basically we are actually how to say, using the stock to actually generate leasing income. Okay, and some of you might actually ask, how do you use stock to actually generate leasing income? Okay, the good thing is that we are going to use options to do this. Okay, and there is actually two ways to actually do this. Okay, the first way is actually what we call a structure using covered call. Yeah, and this covered call involve you buying 100 shares. For example, we are taking this stock, Apple as an example. Okay, and take Apple as if it is the property. Okay, it is the property, because I'm saying a similar asset class, right? Property, Apple, same. Okay, condominium and Apple is the same. Okay, instead of buying a condominium, you are going to buy Apple shares. Okay, and 100 Apple shares, which is trading at $162 today. And for 100 Apple shares, basically you're going to pay how much? 16,000 $16,200 US dollar. And of course, if you convert it to Malaysian ringgit, then it will be about 68,000, which is more or less the $60,000 capital which you have buying a property. Yeah, remember just now, you put in $60,000 to buy the property and you rent it out. Okay, so in the stock market rent to lease concept, we we are actually buying 100 shares, and then we are paying $68,000 or 16,200 US dollar, and then what we do is we are going to actually sell what we call a short-term out of money calls. Okay, what is this out of money calls? Okay, when this is basically like just to like a rental lah. Basically, what we are selling is actually we are giving out the right for people to actually buy our Apple shares. Yeah, we are giving out the right to other people to buy our Apple shares. And if you put in this scenario, it is like we are renting out our Apple shares to other people. We are renting out our Apple shares to other people. Okay, and in order for us to actually rent out the shares of these 100 shares, that means we are renting it out to them. They will have the right to buy these shares. They will have the right to buy these shares, and they will pay you a rental for this. Okay, and this rental, which they actually pay you, what we call, it will be paid in premiums. Okay, and this premium, basically, if we actually do a monthly so-called rental, right? That means we give them a right to rent our Apple shares for 1 month, which is 30 days. Basically, we can actually get a rental of 300 over dollars. In this example, $375. Okay, that give you a return of 2.3%, 2.3%, which is 375 divided by $16,200. Yeah. So of course, with 68,000 capital, yeah, you buy Apple shares, you actually get to get US 375 cash flows, which is about $1,575 every month. This is a cash flow to you. Okay, as if you are earning a rental income for this stock. Yeah. So this is the first way we actually use stock to mirror property asset class. Yeah, generating income by owning the asset. Okay. And of course, if you say I don't have $68,000 lah, or I've already put $68,000 to buy the $60,000 to buy the property, I don't have $68,000. Okay, I that means I cannot do this so-called leasing of stock to mirror property investment. No, no, no. There's another way. There's another way which is also using options, which is what we call a diagonal. A diagonal is actually the name of the option structure. Okay, option structure. And as I said, you don't need $68,000 to do this, right? And of course, the other name where people call this diagonal is actually a poor man's covered call. Okay, it's for poor people like me, lah. Okay, so if for poor people who don't have money to actually buy 100 Apple shares, right, they can actually have similar kind of rental income for the stock using a diagonal or what we call a poor man's covered call. Okay, which is a similar structure. But of course, we actually do not need to buy the 100 shares. We do not need to actually buy the 100 shares. What we do is actually we do what we call we buy in the money call 3 to 4 months expiry period, 3 to 4 months. That means about 90 or 120 to 120 days expiry with a delta of 80. Okay, with a delta of 80. Yeah. And for those who have already been trading options, of course, I'm sure you know what is actually the delta, right? The delta. Okay, so we buy this in the money call. Yeah. And basically what this in the money call is to actually replicate the 100 stocks, 100 shares, 100 shares, is to actually replicate 100 shares. So at 80 delta, basically it represents 80 shares. It represents 80 shares. Yeah. And of course, because you are actually buying options which has 90 to only 120 days expiry, right, then it will be much more cheaper than buying 100 shares. Yeah. Because it's an option, and of course when it expire, the value can go down to zero also. Yeah. So this is a cheaper way to actually do this, buy in the money call. And of course, the other structure, the other side of it, to sell the short-term options is actually the same, which you also sell the short-term options on the back of this in the money call which you own. Yeah. And of course, to buy a delta 80 3 to 4 months options will cost you $3,195 US. Okay, so compared to $16,200, right? Okay, $3,195 is much more affordable. I mean, okay, I can afford lah $3,195 lah. 16,200 maybe I cannot afford. Okay, so a fraction of the cost compared to 16,000 is actually about 5 to 6 times much more lower cost base. Okay, and of course the premiums which you generate out of this is actually the same as you're doing for a cover call, and it's also $375. But of course, what changes is because you're actually using a lower capital, right, of only $3,195, and you're generating an income of from the selling of the call, right, the call, which is your lease rental income, like your rental income for Apple stock, right? Then the returns, right, is actually about 11.7%. 11.7% compared to 2.3%. Yeah. So 5 times lesser capital. Yeah. And of course, as a result of five times lesser capital, the returns also multiply by 5 times. Isn't it great? So if it is a great thing, and of course, if you like it, give me a thumbs up. Then of course, I will further also explain. Yeah. So again, this comes to about $13,000 ringgit lah. You convert to ringgit, capital, and you get 1,575 of cash flows monthly. Okay, monthly you actually get these cash flows. Okay, so these are the two ways for you to actually mirror property rental through options through the stock market, using stock or and also options. Of course, it is not limited to Apple shares. You can also do it on shares like Microsoft. You can also do it on shares like what other shares, strong stocks lah. I mean, don't do it on stocks like T dog or Tokyo Sign and all this. You do it on stocks which are actually strong. I mean, if you buy a property, right, you also want to buy a property which is prime, which is in a good location, which has what is that, which has actually future appreciation in capital. So the same thing, the same concept, which you think of property investment, you just put it in the stock market. You would actually want to have similar kind of how to say, strong assets. Yeah, so strong stocks, you actually can actually do this. Okay, so what you actually do is that on a monthly basis, you actually sell the short-term call, right? Short-term call every month you sell one, you generate $375. Of course, the price can fluctuate over time, right? Depending on when you sell and all those. But generally, you can actually generate $300 is not a problem for stocks like Apple. Yeah, monthly income. So both sides, basically you actually do this on a repeated basis. Month one, month two, month three, you actually do. But of course, if you do not hold Apple shares, right, then before the options expire, yeah, before the options expire, you will need to actually renew your option. I mean, you don't own the asset, ma. You are basically also renting it from the stock market through an option. Yeah, I mean, that's why for the second diagonal we call it rent to lease. That means I even myself I rent it, and then from there I rent it out lah. I rent it out lah. You don't even need to own the property. Yeah, you don't even need to own the asset. You are just renting it with the second option. That's why it is cheaper. And of course, the returns can also be much more higher. Okay, so the difference, you need to roll it, renew. You need to rent another. You need to actually buy another. That means you sell the old option. That means the previous option which you bought on day one, you sell it, and then you basically buy a new one with another 3 or 4 months expiry. Then you repeat the cycle. You repeat the cycle and generate these cash flows. Okay, so the benefits, of course, on the covered call is you can also have the stock capital appreciation. Of course, if Apple price goes up, you also get to actually enjoy the capital appreciation, just like your property. Okay, if your property price goes up, you can actually enjoy on the capital appreciation. So the same as this, you can also do that. And of course, the other one is no other than the monthly cash flows lah. I mean, if you were borrowing to buy the property, you don't have cash flows, right? You can see that the cash flows is zero, right, just now. But of course, with this, then you can actually see a so-called net cash flows that coming through from this covered call structure. The same as the diagonal, you can actually see what is that? You can actually see the net cash flows coming in. Of course, on the option side, using the diagonal, you can also increase your have capital appreciation through the option price appreciation. That means if when you actually enter into the contract for $162, right? You buy the option, the price was $162, and of course, when the Apple price goes to $172, the option value will also increase together with the increase in the stock price. Increase in the stock price will also increase. Of course, there is no free lunch lah. I mean, the stock price or the option, the stock price can also go down. So if the stock price goes down, then of course you will actually suffer unrealized loss. Like if you own the shares, right, you actually suffer unrealized loss. But of course, this is net off from the cash flows which you generate out of this leasing of the stock using the options, right? Then of course, if you are doing on the option side, the option value can also come down. But of course, you are only spending a fraction of the cost, yeah, as compared to putting in 60 over thousand ringgit into doing this structure. You're only putting one fifth of the capital, yeah. Then of course this brings down your risk. This brings down your so-called risk to only one-fifth. But of course, the good side is it brings up your returns. Remember, on the diagonal, you are actually making a return of 11% as compared to a covered call, which you're actually taking a return of only 2% per month. Yeah. Okay. So this is how traders use options to actually uh, mirror property investment as an asset generating as an income generating asset. Yeah. So this is how we actually use this. Okay. So I mean, for those who are, for those listeners here, which is the first time actually listening to this, of course, you can actually learn more about cover calls and also diagonal. You can actually learn more. And if you have any questions, I mean, do post here or also on our website, or email us, and then we would be glad to actually answer any of your questions. Yeah. Okay, so this is what I actually wanted to show you, how to actually become a property tycoon. How to become a property tycoon through the stock market. Yeah. Okay, so I mean, right now it's about 8:30. I mean, basically that's what I wanted to share with you guys today. And next week we will find some other interesting topics to actually share with you. And of course, if you want to learn more about trading, about the markets, about options, do connect with us every week on this Traders Talk. And of course, the past Traders Talks are also on our Facebook page. Yeah, follow our Facebook page, and we'll be glad to actually share with you anything you actually want to learn about trading, or anything you want to learn about options. And actually, if you are starting, or even if you feel how to say, if you feel down, I mean, during this time where if you just started, right? I mean, there are a lot of traders who have actually just started into investing or trading, and they hit this so-called bad market year. We hit this bad market year. Don't get dejected, don't get demotivated. It is only how to say, it's only a seasonal thing, a cycle. I mean, it's only a cycle. If you go through it faster, then of course it will actually benefit you, because you learn from this so-called bad experience. Yeah. And all traders would actually have to go through this good and bad cycles. Everybody actually goes through it. And if you are stuck, if you are not going anywhere, don't be dejected. Continue to engage with us, and we will share with you all the good and bad things, or that we traders have and need to actually go through. Yeah. So until next week, we will actually catch up with you again. And for those who have joined us today, yeah, great to actually see you here. And bye bye.